Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey, and this week I'm joined by David Bartosiak, who's the editor of Zacks Momentum Trader, to discuss one area of the stock market that basically, I believe, has the most momentum right now. And I don't think many investors really know about it or are following it, or they're only following part of it. And that area is the gold miners, not gold, even though that has momentum too, but the mining stocks. They're on fire and nobody's talking about it. Dave, what do you think?
I think I talked about it.
You talk about it? Well, we talk about it amongst ourselves, but like in general, nobody's on Twitter, stock twits. You don't see like the miners, trending very often. You sometimes see the ETFs because people are trading those, the nugget and all of that. But the actual individual gold mining companies are kind of just being forgotten about, but the stocks are soaring.
Right.
I can't even believe how hot they are.
Yeah, I think it's because they were so beat up for so long. And then now that they're finally coming back to life, it's
huge.
You almost can't believe it.
Right. I look at some of these charts. But we're going to give people a bunch of stock picks today of the gold miners for those who don't want to be in like the nugget and those ETFs. I like the ETFs, but Jeremy and I discussed those when we discussed gold a couple weeks ago, and that's a fine way to trade it. But I feel like there might be more upside in the actual miners themselves, in the companies.
Yeah, I mean, I guess it depends on you're also.
I'm not talking about like the triple ETF,
right? You're talking about like the GDXJ and GDX, so the gold mining ETFs, the junior miners, and the regular one. It's just you have that risk, if you're buying individual stock now, that one company,
something can go wrong.
Sure.
But, and with miners, that's definitely a risk.
Yeah, but the thing with the gold miners is, a few years ago now, when gold really got beat up and the miners just got taken to the woodshed because it was so expensive for them to still produce. I mean, it's similar to what was happening with oil this year, where you had some of these producers that cost them, $80 a barrel to produce oil, the offshore guys, things like that. And then when oil prices started to crater, then all of a sudden those guys were in trouble. And then what they had to do is they had to scramble to go ahead and cut costs to get, so that they wouldn't go bankrupt, essentially, moving forward. That already happened in the mining industry over the last couple of years. So the ones that have survived are here on much lower cost of getting that gold out of the ground. And now that gold's coming up, they're really getting a huge shot in the arm.
So I like to say about the energy companies that they're becoming lean, mean fighting machines.
Yeah, totally.
So that's what's happened to the mining.
And some of them will die.
Okay. But they would have already died, right?
I'm talking about oil.
Oh, yeah, those guys. Yeah. They haven't gone through the whole cycle yet. Yeah. But with these guys, there's been consolidation, and any of the ones who remain are basically the winners.
Sure. And the other difference is that you didn't have as much debt issuance on the gold mining side as you had, with the oil E&Ps. 25% of high yield is oil E&Ps.
Yeah.
Gold mining is not even anywhere close to that, I don't think.
No. Okay, so I had this other question because I have looked at the charts and my jaws dropped open and dropped to the ground are these too hot to handle? Have they already had the run up and now here's Tracey coming along that she's going to jump in now. Whoops, the rally's over. Like, is that where we are?
Well, in the short term, like last week, I think last Wednesday, when I was on Bloomberg, I said short them essentially. Okay. I was selling the at the money call spread, right? So I was basically betting that these would go down. And that was really just a function of the short term, the market just being way overheated. Saw the Brexit thing, saw gold go way up. So I just thought that we were going to come back a little bit. Now here we are a few days later, and the market is here at all-time highs, but gold is starting to creep down.
Mm-hmm.
So my timing wasn't perfect on that, but I think in the short term, you have to see a little bit of a pullback, right? But really, that should just be looked at as a buying opportunity. I think it's not. I think we're far from over.
Okay, because that's my main worry when I see things up 180% on year to date.
Yeah, and some of the smaller miners, you're going to have that.
Yeah,
but that was just because they were so beat up and they weren't making any money. And I'm pretty sure if you looked at the Zacks ranks on those back then, they were probably 4s and 5s. But now, I mean, I pulled this up earlier today. I've got 7 stocks in the gold mining industry that are Zacks ranked number 1 strong buys.
Yep.
7. And then another 9 are Zacks ranked number 2 buys.
Wow.
So there's 16 stocks right there in one industry.
Okay, so that basically means the estimates are rising on all those companies.
Right. And that's one of the great parts, I think, in using the Zacks rank is for the turnaround story, right? We've seen the market sort of turn around and the stocks have gone up, but when the estimates go in your direction, that's when you know that this is here for a reason and it may be here to stay for a while.
Okay, I kind of noticed that when I was, looking around at some of these number ones is mainly what I looked at because why not? If there's that many of them, I might as well check out what their stories are. And I noticed that not only are the estimates rising, but they almost all are going to make money this year, which
Sure.
for a lot of the miners was not the case in the past. So, and some are paying the dividend again. And so the story actually looks real good. Like if I'm not even thinking about, gold and doomsday and all of that stuff, if I'm just looking at these company fundamentals, I actually like what I see on a lot of them. I can't believe I'm saying that about gold miners.
Well, I mean, you don't have many unknowns, right? You know how much money it costs them to produce an ounce of gold. You know where the price of gold is today, and you know what their volume is coming out of the ground. So, really the only fluctuation is going to be that gold price, right? And you don't have the situation that, and I keep drawing the parallels to oil, but you don't have the situation where at any time, somebody could turn on the spigot and, triple the amount of gold that's coming out of the ground. They just don't have that much elasticity in their, supply.
Now, a lot of these gold miners actually mine the gold and the silver and copper. Are all those three kind of bullish plays here? Gold is usually their focus, but they have these other
Well, yeah, I mean, because they're
metals.
like byproducts of the mining for
Right,
gold. So you're
right,
out there going for the gold, but then you're getting these other things. You're not just going to throw them away,
right,
right?
right. But it feels like silver's rallied quite a bit too.
Not as
So
much as gold, though. That's
yeah.
the thing. I've talked to a lot of people that are kind of frustrated by silver's lack of a rally in the face of gold, but that's because the gold trade here is kind of, I think it's pretty specific. It's not the fear trade that people mistake it for. It's the anti like fiat currency trade essentially. So this is the Brexit trade, right? It's money coming out of the pound, going into the dollar, going into the yen, going into gold. Same thing happened in China. As they devalue, you'll see gold, you know? So I think you'll see, gold's going to track with Bitcoin pretty much. I mean, we're going to talk about
Okay.
Bitcoin in the future, but
That's a
I'm
little
telling you, it's going to be a thing.
okay.
It's going to be a
I
thing.
have to wrap my head around that one.
Yeah. You're going to see a track, but that's that's, I guess, where that asset class is going to fit in. It's not, oh, I'm afraid, let's go buy gold. We have the VIX for that, right? It's going to be more like, moving away from your country's currency into something that's a store of value in the near term.
Okay, so if I'm looking at these gold miners and I actually want to buy, one or a couple of them, do I look for the big guys or is like smaller going to be better here? Or do you have a preference?
I think smaller is going to offer a greater reward. It's going to be higher beta, right? More risk, more reward here. But we know what the risk factors are kind of in the general market. But we also know where gold is and where gold, well, we don't know where gold's going to head, but we have a hunch, right? That gold could be supported here, especially if you're talking about the global kind of macro events that are taking place. We're talking about helicopter money in Japan right now. So anything like that's going to put pressure on a major world currency is going to benefit gold, which should in turn benefit these gold miners.
Do you have a favorite?
On the small guys, not really, because
How small is small? I guess that's the question.
billion, 2 billion,
Okay.
5 billion.
Okay. So that would be like, I think they call them intermediate producers. Those are the ones that are between like 1 and 3 billion or something, I think are the intermediates.
Yeah. So
Um,
I mean, you could look at and I guess the reason why I don't have a favorite amongst these, right, is because what do I know personally
Right.
about a mine in Mexico versus a mine in South Africa versus I mean, I have no
Right. That's
idea,
why it's
right?
hard to buy these.
Sure. So you just kind of go and find you got to lean on what you're seeing from the analysts and which of these stocks are actually being covered and that
Right.
sort of thing. So I would advise against just picking a random gold stock that's small that doesn't have any analyst coverage whatsoever, right? There's definitely risk involved in that. And I kind of steer more towards stocks that have a Zacks rank here, that have a
Right.
few estimates at least.
Right. And that are supposed to make money out of their mines. Okay. So I did look around. I will reveal this. I used to be a gold mining investor back in like 2006,
Okay.
2007, when, back when the doom was coming back then. I bought a lot of the mining stocks because we didn't have as many of the ETF options and things like that yet. And so I used to own like Yamana.
Hmm.
I think Newmont was in my portfolio at one point, but strangely,
You
I
can't be a gold mine investor and not
not own
have
some of those
Newmont
guys. I know,
at
like
some
some of the
time.
big guys. But I also own B2 Gold,
Yeah.
but I only owned it because I think back in the day it was owned by one of these other companies I owned, and they spun it off because it was like some small guy, and suddenly it was in my portfolio. So all these years I've just left it in there. The ticker is BTG.
Hmm.
And now suddenly I was paying attention recently and looked at it,
Yeah, they're on
and I
fire.
was like, wait, how can it be up that much? Because it was like $1. So I'm like, I'll just leave it in there. It wasn't like that many shares that they spun off to
Right.
me. And now it's $3. It is at new highs. But I looked at the fundamentals, and it's pretty good with these guys. They produce out of the Philippines, Nicaragua, and Namibia.
Hmm.
The market cap is 2.8 billion. They are number one because those estimates are rising. And so plays like this, I feel, are kind of interesting in this market. There's another one that I saw that was intermediate producer, also number one, called New Gold, and their ticker is
What's that? Yeah,
NGD.
NGD. Yep.
They're Canadian, and they produce in areas, and I do think this matters with some of these miners if you're going to buy individual ones, of where their mines are located, because there's also, social unrest, labor issues, and all these other things. Or even like you don't want to own a miner that has mines in Venezuela, for instance, right
Right.
now.
Right.
So New Gold is in the US, Australia, and Mexico. They have 4 producing assets in those, and I think in Canada, in those countries where it's fairly stable. So I kind of look
Sure.
for
And both of
that.
those are number ones right now.
Yeah.
And then one that I talked about actually in my I did my 12 stocks of Christmas video
Oh,
was Sabanye Gold,
okay.
SBGL. They're on the number one list. And then Rand Gold Resources, which probably has the most obvious ticker, GOLD.
It probably gets bought just because of that.
I bet that happens a lot, yeah.
They're one of the big guys, though, Rand Gold.
Well, big in terms of the stock price is big, but I think they're still their market cap now.
they?
I think they're still kind of the intermediate.
Oh, okay.
Yeah.
For some reason, maybe I just know.
Well, it's because
them.
it's $110, $100 stock
Yeah.
or whatever it is today. I think that's why, because a lot of these guys are $3, $4, $5.
Right.
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 But
New Gold is $5,
yeah,
and B2 Gold is
which is fun.
$3,
People
like I
love
said.
buying those $5, $10 stocks, right?
They do. Yeah, you get lured in for
you
sure.
You really do, because it's fun seeing like, oh, I got 10,000 shares of this bad boy,
right.
right?
Right.
But in the grand scheme, it doesn't matter, right?
Right. Right.
Percentage is a percentage.
Now, another one that I thought was really interesting, and I did just write about this one for a Bull of the Day, actually, is called Royal Gold,
Mhm.
and their ticker is RGLD. And what makes them a little different is they actually don't own any mines. They get their money from contracts that they have with the miners, and they get royalties and what's called streaming from everyone else doing the mining there. So they kind of just sit in their offices and like wait for the money to come rolling in.
Sure.
And I noticed out of their biggest mine, where they get the most of their revenue, they are paying out, or into the contract is only at like $490 an ounce. So you can see like how much revenue is coming in from that mine right now with the price of gold where it's at.
Sure.
They just renegotiated that contract actually because that mine is being bought out, which is a risk with some of these companies, but it's their biggest revenue stream. They just renegotiated. They're going to take a little bit less on the gold side, but more on the copper, and they're getting a new owner of that mine who's very much more stable than where it's at. So the analysts all like that. That's why the estimates are rising there. And they actually pay out to the shareholders when they're getting these big revenue streams in.
Makes sense.
So yeah, so last quarter, it changes every quarter depending on what's coming in. But
Right.
last quarter was a record dividend for their shareholders, which was about 1% yield.
Sure. It's almost like
So-
an MLP, right?
Yes, basically.
You're just like the
Yeah, they got the contracts. But none of these stocks are really cheap. We haven't talked about that. Like you are buying the growth, and some of them, the earnings, because now they're, estimates are rising, price of gold is up, their earnings are rising, and you're seeing 100, 200, 300% earnings growth year over year. But I'm also seeing,
coming from a lower level though too.
it is. But I'm also seeing PEs that are, 40 times, 50 times. Some of them are, 60 times. They're not cheap here.
And that's trailing 12 though?
That's forward.
Forward. Okay.
Yeah. So even though the estimates are rising, they're not really keeping up with where the share price is going at the moment. Does that disturb you or bother you at all that, people are paying a little bit more here?
I mean, we're pretty much paying a little bit more for everything now, right? So a lot of these valuations kind of historically are being pushed a little higher, I think.
Okay.
Um
So are you saying this time it's different, Dave? This time, don't pay any attention to those valuations.
I mean, I've never
Does anyone care about valuations with the
remember,
gold miners
no,
anyways?
No, I mean,
No.
you care about valuations when you're going to hold something for what? Years and years and
Yeah,
years, right? If you're in for a trade, you don't care about valuations.
that's true. Okay, good point to make.
Yeah.
And this is much more of a trade type of situation than, hey, I'm going to hold on to Yamana for 10
absolutely.
years. Yeah. Because obviously I'm no longer holding on to Yamana in my portfolio.
If you're going to hold something for 10 years, now you've got all, I mean, you have to be in a business that you think is going to evolve consistently over the next 10 years, right? So if you think that gold is going to be $5,000 an ounce in 10 years, right? Then this is something you stick with. You don't care about the valuation and you go through it. If you're paying attention to our Zacks rank, that's a shorter term indicator, really.
Right.
We're seeing the movement in the Zacks rank. We're seeing the analysts up their estimates, and we just want to kind of get in on it. But like I said, in the short term, they're a little overcooked.
Okay.
But they've pulled back. I mean, this afternoon, I think they're pulling back right now as we speak, while the market's up here at all-time highs.
Do you think there's more opportunity in the miners right now than in the actual physical gold?
Yes.
Okay. So if I really want to trade and I feel, I want that upside, I need to be in the miners.
Yeah, and part of that is because the market's screaming higher.
Right.
Right. So on days like today, where gold is down a little bit, I think, and we're, equity markets are rejoicing right now because of this sort of, retrace of this Brexit trade, right? So the pound's back up to $1.32 now. The yen's over 104, I think, earlier today. So a lot of that fear, that kind of flight to safety in terms of currency is unwinding a little bit. And that's not good for gold, just in the short run.
Okay.
But it's good for miners.
Yeah. I have a feeling that we'll be writing and discussing the miners and the silver miners too. We didn't cover them. There's fewer of them. And like I said, the gold does silver a lot of the time, so you're getting both. But I feel like we're going to be covering a lot in this area on Zacks.com in the coming weeks and months.
Yeah, and then with silver, it actually has industrial uses, right? So versus gold, where you just dig it out of the ground, shine it up, and put it around your neck.
Right. I don't mind that.
Or in your grill.
Yeah, there's a lot of there's some other uses for gold these days.
Yeah, some.
Now, have you seen any gold stores opening up near you, like out in the suburbs
they
at all
opened
or
up
anything? They opened up back in the day.
In the suburbs.
Way out there.
Way out.
Felt like there might be some out there. I haven't seen any.
Well, I mean,
There
they
used to
opened
be.
up a couple of years ago, and I don't think they've left though.
The ones I've seen have closed down.
I haven't seen
in the neighborhoods I traverse. Danny's shaking his head about
they
the
closed
closure.
down, and then they open up vape shops.
They did that, and just tobacco in general.
Yeah.
Like, come here,
Totally.
especially the further out you go. For those who don't know, like Cook County taxes on cigarettes are really high. So people drive out to the further out counties where it's lower and you save all this money. So they open up all these tobacco shops right there.
Yeah.
But one of the ones I know of used to be the gold and now it's the tobacco.
Yeah.
You just drive right up. So I'll be watching to see if maybe they add in the gold again. They'll keep the tobacco and add in some gold. Then I'll know it's getting a little bubblicious if we see more
Yeah, I don't.
gold.
That kind of hysteria around gold has just flat out passed. And I
Yeah.
think it's going to be a while until we start talking about it again. It's like
Okay.
these bubbles come up and then
Gold 2000.
we forget about
We'd
them.
have to maybe at 2000 somebody if it gets up
They'd
there.
have to get there for people to start really talking about it again, I think.
Okay.
As excited as they were about it, several years ago.
Yeah.
I mean, I just think these bubbles, they pop up once and that's it.
Okay.
It's just not, well, maybe not. Okay, we can't call it a lifetime thing, but like a generational thing, right? So
Right.
didn't it take 30 years between,
Yeah.
the big bull markets and gold?
Yeah.
So,
Okay. But in the meantime, you can play this mini rally that we're in right now with these gold miners, many or most of which have really good fundamentals. So be sure to check those out on Zacks.com and to check out all of our articles. Like I said, I just wrote on Royal Gold. That's the ticker RGLD. I know Eric Dutram wrote on B2 Gold, BTG. I'm sure we'll cover some of the others, including New Gold we just talked about, NGD. We talked about Yamana, AUY, Rand Gold, GOLD. What was that other one you had?
Sabanye,
I can't,
not to be confused with
pronounce that.
Kanye.
Okay. And that's SBGL.
Yeah.
Is the ticker on that one. So definitely check us out on Zacks.com, all of our articles, and you can check out our other podcasts also on Zacks.com. Jeremy and I did one just on gold in general and how to play it, or if you should be in gold. And on that one, we talked about the ETFs and just general gold plays. So check out that. And you can find that also on SoundCloud, any of our podcasts, and you can also find them on iTunes. So until next week.